All right, guys, we are live, and this is our first time doing a video like this. We are doing a breakdown of a Michael Saylor video. Michael Saylor is a big proponent or advocate of Bitcoin. A lot of people consider him the poster boy, as his company, MicroStrategies, is one of the largest holders in Bitcoin. I believe they're of the top 3 largest holders. So he put out a video where he said a lot of what I would say esoteric, confusing things. So me and JT just wanted to come on here to kind of demystify it and break it down so that people can really understand. JT, how you doing, man?
I'm pretty good today, man. As you can see, sunny day. I love the sun. Hey, look, anybody who says the weather doesn't affect them, they're probably lying, bro. 100%. Because when I'm in the sun, I just feel so much better. That's why I always, since I've been an adult, I lived in sunny climates pretty much since I moved from Detroit. And yeah, man, you know, I've been excited to make this video because I like doing little reaction videos. I only did one in my whole YouTube career, but yeah, Michael Saylor finally shat on Bitcoin. No, I'm just playing. But no, he confirmed a lot of the main point I've been making about Bitcoin, and that is it isn't a medium of exchange. And so we want to take the opportunity, let you guys hear it. He says some other things, as Vince said as well, that are kind of esoteric, maybe hard to understand. So we want to break it down. And we love and respect Michael Saylor, but he's also very funny with his level of conviction of Bitcoin. I'm not going to lie. So yeah,
hilarious.
Let's get into it.
Hysterical.
Bringing it back to the conversation around how should we think about changes to the protocol, I think it comes back to what people see as the purpose of Bitcoin. So as an example, there's a big debate. I mean, this is kind of one of those things where people look at the white paper and they say, oh, look at the white paper. It's Bitcoin, a peer-to-peer electronic cash system, right? And of course, that's where some, Bcasher, big blocker types will sort of say, oh, see, you can't use it as cash anymore. And then maybe somebody else might counter to that and say, well, actually, what we mean by cash is final settlement. And by that, we're sort of thinking closer to this idea of, as you said, digital property, digital money. And so do you want to just spell out some of your ideas on Bitcoin principles as they relate to, what the purpose of Bitcoin is and what sorts of changes, if any, should be considered?
Yeah, I mean, I think that you got to start by saying, Bitcoin's primary role is to serve as an economically sound, technically sound, ethically sound foundation for the future digital economy. It is, in essence, sound digital property or sound digital money. I've described it as digital energy, but you can think of it as digital material. How do we manifest $100 trillion of real value in cyberspace? Right? How do we do that and make that stable? Right? Before Bitcoin, all money, all financial transactions in cyberspace are based on credit. Right? There is no digital money. There's only digital credit in the world before Bitcoin. So I send you $1 billion or $1 million. It's a credit on Visa network or on a banking network. And if the analog real world institution chooses to honor the credit, then the money changes hands. But we've talked about the problem with that before. Like I want to send $1 million 40 times, and every time I lose 2.5%, and it takes 1 month. And so it takes 4 years to move the money 40 times, and I lose all the money, right? In essence, after 40 vibrations of the money, it's gone. So the world of credit money isn't a foundation to build anything lasting or functional in cyberspace. So Bitcoin's primary role is to serve as a digital monetary foundation for the future of humanity. And if there's $900 trillion worth of stuff circulating, right now 0.1% of that is digital money, as we understand it with Bitcoin. If we want to actually move into the 21st century, into the cyber economy, you could imagine that we should be getting to 100, 200, 300, 500 trillion dollars worth of monetary value circulating digitally. So it's the foundation in the same way that the granite is the foundation of Manhattan. But it's not the applications, it's not the buildings, it's not the businesses, it's not the political systems. And so to think that it's the currency is a mistake. It's not meant to replace equity. It's not meant to replace currency. It's not meant to be a medium of exchange. It's meant to be the underlying conservative foundation of the entire economy.
So as you can see, the main piece of that Michael Saylor clip is that he's confirmed something that we've been saying on this podcast for pretty much since we started. I feel like it's been a long time, but we started like 3 months ago, or maybe 4 months ago now, something like that. Feels like a long time, but we've been saying for a long time, when it comes to Bitcoin, people who thought in the beginning and even think now that it's going to replace the US dollar or any other fiat currency that exists today, unless the fiat currency hyperinflated itself away. They were wrong, and they are wrong. And it's not because they don't know what they're talking about. It's not because they're dumb. It's not because anything negative at all. It's just that on the surface, I think most people who came into Bitcoin, the first thought is it's going to be the new money. It's going to be the new currency. It's going to replace the US dollar. That's everyone's first thought when we got into it back in the day. At least, I don't know now when someone new comes into it, what they're thinking. But I know that's pretty much what all of us thought. That was literally the conversation back.
I think they still do. People still ask me, like, you think Bitcoin's going to replace the dollar?
Okay, yeah. So a lot of people still think that it's going to be the circulating currency, and it just doesn't make sense. And going to the three prongs of an actual currency is unit of account, medium of exchange, store value. Bitcoin fits two of those. The one that it doesn't fit is the medium of exchange. Yes, it can be traded, it can be exchanged. But in terms of a universal currency for a society, Bitcoin isn't it. And even if it is another crypto, it could be built on top of the Bitcoin layer and use Bitcoin as a settlement layer, as he said in the beginning, final settlement. But the Bitcoin layer itself, it's not made to be currency. And you can even see, if you go back to the white paper, the whole premise is based on dollar debasement. Really, that's what it's based on. Dollar debasement due to careless policies and maybe some manipulative practices, right? Now, what other asset has that same idea? Gold? Yes, exactly. Now, do we look at gold as a currency? Not a chance. No one would. People still freak out when they see a gold coin for the first time in their life. People still freak out when they see my silver bar. You know what I mean? Because that's stuff that people will call hard money, good money. But it's like, man, it's money, but it's not a currency. Currency implies a current. And gold and assets such as gold, which serves as a store of value and some unit of account, especially in terms of currency debasement, which is why the gold price goes up in the way it does, because it's kind of almost a direct correlate to dollar devaluation. It's literally protecting your dollar's value over time. And that's essentially what Bitcoin is. The difference with Bitcoin is that it has much more of a speculative side to it. And so you get much more volatility and it's a much smaller asset. But eventually it will function in the same way that gold does, but this just in a digital form. And because of the digital nature of Bitcoin, you'll be able to still transact with it in, small ways like we do now. And so that's my take on that.
Yeah, that's good stuff. Just a few points here. You pretty much said most of the things in regards to like Bitcoin being considered a currency by most people, competing with the dollar. You have to look at how it's regulated. CFTC, SEC, like all the major regulating bodies, they consider Bitcoin property. To compare it to the US dollar or the euro, it lends itself to a tragic misnomer because it's competing with other property, other assets, real estate, stocks, bonds, gold, commodities. And when you look at it from that lens, it allows you to actually see the value, because it's kind of like, we use a basketball analogy, like comparing Shaq to Stephen Curry. It's like they don't do the same thing. So whichever person likes Shaq more, whichever person likes Curry more, they're going to think they're better just because that's probably who they identify with. But if you compare Stephen Curry to Magic Johnson or another point guard, okay, now you can go tit for tat.
It's funny because I was thinking about a one-on-one match between Shaq and Steph Curry 100 times. And I'm like, damn, I guess that depends on who got the ball.
Yeah.
Literally. It's hard for either of them to stop each other. So that's a good point.
I'm taking Shaq though, but
I'm gonna take Steph, give him the ball. He might not miss. Just saying. And Shaq, give him the ball. All you gotta do is back him down, but Steph can steal the ball.
Yeah,
but anyway, I'm just saying you made a good. That was a good analogy. I'm just saying.
Yeah, Shaq can move. Anyway, another point you said, JT, was that Bitcoin isn't meant to be a currency. The Bitcoin network isn't meant to be a currency. That you said something to the tune of it can be used for final settlement. Now that one I partly agree. I do, and the only reason I partly agree is because like another analogy he gave, or another thing Michael Saylor said in the video, was that Bitcoin is supposed to be like the foundation of the digital economy. Years ago in the video, he talked about like how crypto has these 3 pillars or 4 pillars, just like the real world. So you have the currency, which is like the US dollar. I think this is like a real estate analogy. You have the land that the building sits on. Then you have the actual building, and then you have the offices inside of the building. So with crypto, the currency is stable coins. So stable coins are competing with the dollar, if anything, even though they're kind of the same thing. Stable coins are the currency. The land that the building sits on top of, that's Bitcoin. That's the actual foundation. And while things aren't like directly being built on Bitcoin, even though there is like, you know, you have stacks and DeFi being built on Bitcoin as of late, the Bitcoin white paper paved the way for Turing complete blockchains like Ethereum that can better host smart contracts and decentralized applications. So you have Bitcoin as the land, you have the buildings as like your Ethereums, your Cardanos, your Polkadots, like your layer ones. Then the actual applications built on top of those layer ones are the offices inside of the building. So it's like when it comes to Bitcoin as a settlement network, I'm surprised that there aren't more stable coins on the layer 2. Actually, I'm not surprised because layer 2s aren't built out yet. And layer 2, like the one thing about Bitcoin is that it's not scalable, meaning like the transactions per second is only 7. And right. Each blockchain you're competing to get inside each block. So these layer 2s, you hear about roll-ups, they roll up the transactions and submit them to the chain. And when you roll up, you compress them. So when you send it, it'll compress data. So I can see stable coins being built on Bitcoin, used as a settlement, because Bitcoin is the most secure network in the world. But Bitcoin itself will never be a currency, because why would you want something to be a currency if the value is going up and down? That's like, in a way, barter. And that would mean we will be going backwards as a society.
Right, 100%. That's actually another great point that I failed to mention as well, the transactions per second. So you got companies like Visa, you know, and MasterCard, they're doing 60,000 transactions per second. And then you got BTC doing 7 per second. That's pretty insane. And during that time where you're waiting on your blocks to be confirmed, you don't know even if your Bitcoin is still worth the same amount. And so by the time the merchant will receive your Bitcoin, I mean, you could end up paying more or you can end up paying less. Now, it could be a situation where the merchant's like, hey, buddy, you owe me this. Or he just takes the L, you know, because he decides, okay, this is a risk of transacting in Bitcoin. But that just adds unnecessary stress. Imagine that times everyone in the US using it, for example. I mean, that's super stressful, man. So you pay a bill, come to find out you're $4 short on your bill now. Like, wait, what do you mean?
Yeah.
That'd be frustrating. But yeah, that's a good point, man.
Not only that, like the price of Bitcoin can fluctuate, but you can also, like as a merchant, and I can see merchants using Lightning Network if they really want to accept Bitcoin. Yeah. But it can be a situation to where, like, if I'm running a coffee shop, someone comes into my store and they want to pay for some coffee. The Bitcoin network has a block reward that happens every 10 minutes. So the guy can say, oh, this coffee is $10, and I can not have the Bitcoin in my wallet, but I can send it. Like, let's say block just got validated. So I have another 10 minutes. I can send it to him. He thinks he has it. But after the block gets confirmed and it was understood, or the network sees that I didn't have that Bitcoin in my wallet, that transaction is not going to go through. And now I just stole from him because I didn't have the actual Bitcoin. Lightning Network, they allow you to have block confirmations without waiting on the actual block reward to go through. So again, Bitcoin not designed to be a currency.
Now, that being the case, I think that people that they live for digital currency. They just waste all their time chasing after the wrong thing and debating the wrong thing. Currency is not even that valuable. I mean, if you look at the entire world economy and you ask what portion of the economy is in currency used as a medium of exchange, is that like 1, 2, 3%? Like, what percentage of the wealth of any wealthy person would be currency they use as a medium of exchange? You'd be lucky to see it 1%. So only 1% of the economy is anything related to currency. To focus upon Bitcoin needing to be a currency to create value is missing 99% of the opportunity. The real value of Bitcoin is if I put the other $900 trillion into the digital ecosystem, I could defeat inflation.
He basically talking about at any given point in time, most of the value that exists in a society will sit inside of assets / hard money. The small majority will actually be in whatever that currency is. The currency is just a means to an end. And usually that end is other assets. So that makes sense. So that in the beginning, he's saying people who spend their time chasing a digital currency, they're effectively wasting their time. I've actually never thought about that before because, yeah, currency itself is inherently valueless until we ascribe value to it. The things that are valuable are the assets.
The currencies.
The currency allows us to transact in a universal way. Simple as that. If we didn't have that, then we'll be back on barter, and it will be, you know, we already know the tragedy of the commons. That's the problem that exists in barter. Tragedy of the commons. That's if you have, you know, 4 chickens and I have like 600 pounds of rice. I don't need chickens, but you want rice, but I need cows and you don't have cows. And so now we're like, I don't really need to trade with you because I don't need the chicken at all. I know you need my rice, but you have nothing to give me for the rice. So we're stuck here. And so now universal currency comes into play. And that is the value of the currency because we understand that it is a means to an end to trade these assets back and forth between you and I.
Currency is valueless. So it's like if we're trying to fit Bitcoin into this pigeonhole of being a currency, we're basically saying we want it to be stable so it can value other things, but Bitcoin will never be stable, ever.
Yeah.
It may be less
not
volatile,
really.
but it'll never be stable. Just like gold's not ever stable. The price changes every second, damn near.
Yeah, not really. And you know, this, I don't know why this made me think of this, but that just made me think of, I watched somebody talk about how, it was Swan Bitcoin actually. They talked about how Bitcoin is repricing real estate. And so I watched it, you know, I'm a real estate guy. And, you know, the whole thing was basically because if you denominate other assets that exist today in America, for example, just in America, in Bitcoin, the amount of Bitcoin needed for those assets has gone down over the years, while the amount of dollars needed for those assets to acquire them has gone up. And obviously that's literally due to currency debasement. And so, you know, it's kind of misleading. It's not repricing real estate, meaning like because we have Bitcoin or some other asset is making real estate more valuable. It's just that when you look at real estate denominated in Bitcoin, it shows a decrease in price of that real estate. But that even hammers home the argument that it's not a currency. It's a store of value in which it operates just like gold. And it's almost a direct correlate to currency debasement.
Another thing I just thought about, it makes sense that people and nations hold their wealth and assets because any kind of currency or every single currency gets debased by central banks. They're always printing it. So by you holding a currency, you're holding something where the value's dropping. And by the central banks printing the money, 99% of the time, what happens, and this happens in cycles, is that printed money normally goes to the wealthy, especially when interest rates are low. And then that currency buys assets and it makes the price of the assets rise. And, you know, if you look at the M2 money supply and all the money that we've printed just here in the United States for the past, like even 50 years, 40 years, however many years, it's a direct correlation to the S&P 500, you know, raising just as much. So, you know, you don't want to be holding something that is even getting printed at 2% a year when you can be holding something that can be becoming more scarce or has a utility behind it that could cause people to speculate and make the value go up.
100%. Pretty much any risk asset that we have is going to be heavily affected by liquidity trends. 100%.
Or I can move the money 1 million times a second instead of 1 time a month. So what we're talking about is a high fidelity, high frequency method. The ability to move money based on a computer program 1 million times faster, 1 million times cheaper, and the ability to to manifest capital in digital form such that it'll last 1,000,000 times longer, right? That's the breakthrough, right? 1,000,000 times 1,000,000 times 1,000,000, right? It's a lot better, right? And so I think that the purpose of Bitcoin is that it's to basically manifest the economy in digital space. It's the digital transformation of capital. If there's $900 trillion of capital, what if half of it could be transformed digitally and you move $450 trillion into cyberspace? And well, you would say, well, why would I want to do that? And the answer is, so it'll last forever. It's immortal. So it's indestructible. Check number 2. And so it moves at the speed of light. Check number 3. And so I can vibrate it at the speed of a computer. So if the computer thinks 1,000,000,000 times faster than you and is 1,000,000,000 times smarter than you, and I can move the capital 1,000,000,000 times faster and let the computer use it 1,000,000,000 times more intelligently, and if it's indestructible and immortal, then it's kind of the difference between relying upon animal power and electrical power to drive the civilization forward, right? You can heat your home with a bunch of donkeys in your living room, or you can heat your home with electricity.
Basically, he's saying what we already know. And that's that Bitcoin at this point obviously has inspired an entire generation of young people to learn about finance and our existing monetary system and what it was and what it could be. I mean, that's I would say that's unprecedented. How many people are interested in finance after the inception of Bitcoin? It's kind of crazy how it forces you to do so, though, because everyone who was interested in Bitcoin in the beginning, in order to understand it, you have to understand how our system works now. And you have to understand what doesn't work. Not have to understand what doesn't work to like some detailed, crazy perspective, but you have to understand it at some level, though. And it inspired an entire generation to do so, man. And that was just a singular. It's not a person that did that. It's not even physical. It's just a thing. And it inspired an entire generation. And now we're seeing it in our traditional landscape with the ETF approvals, because you got countries that want to get their hands on these. You got people who are holding funds that are holding retirement funds for other folks who want to put money into it. You got 10,000 podcasts specifically talking about Bitcoin. I mean, it's kind of crazy the influence this one financial product has had. And everything that has been built since then has been built with Bitcoin in mind. So it literally is like the genesis of this all. And yeah, man, we are just grateful to live through such an inflection point, because it's pretty insane. Because when our kids get older, when my 2 sons get older, they're just going to know Bitcoin is just going to be part of their life in some way, shape, or form. Like, they're not going to care about how it started. Like, that's like people caring about how the US dollar started back in the day. Like, they don't care, you know? And so that's how it's going to be in the future. So we're lucky enough to live through these times and live in an information age at the same time, which we can keep up with it in real time. We don't have to go to the library for books. We can stare in our house for 30 days straight and come out a Bitcoin genius. You know what I mean? So grateful for it, man. Good stuff. Swan Bitcoin, great content. Keep it up, guys. Vince, you want to carry us out?
Yeah. You know, I also got my, all the stuff I learned about finance, Bitcoin was like at the core for me. Like, you know, we were doing credit card processing back in the day, but that's just like a branch on the whole tree of this economic system. But it's like, you know, humans learn by contrast. And in order to know what right is, you have to know what left is. In order to know what up is, you have to know what down is. In order to know how Bitcoin has value, you have to know how gold has value. You have to know how real estate, stocks, and just other assets have value. So it did force a lot of people to learn about the economic system, and it made it fun, because it's just like, it's almost like a game. You're predicting, like, man, how is this thing gonna fit? Because when was the last time a brand new asset class was created, and now we have a Bitcoin ETF? Like, stocks have been around since forever. Bonds been around forever. Real estate, first asset ever. Land, precious metals. Like, this is a brand new thing, so it's kind of cool. So
yeah, we're not behind anymore, too. That's another big thing. We feel like we're on point, because when you get into finance as a young man in the 2000s and not the fucking 1940s, You feel like you're just playing catch up the whole time. Pretty much that's what you're doing. So when you start seeing new crypto projects every week, I know I wasn't the only one. It was a mission, and you're still doing it. It's a mission to know about these projects. So yeah, man, no, beautiful thing, beautiful thing.
Yep, investing in crypto is like investing into the S&P before the roaring 20s, before everything started to get crazy. We're gonna see Bitcoin become, like Michael Saylor was saying, the whole foundational piece. Like right now, the dominant form of collateral is treasuries. I'm not gonna say Bitcoin is gonna surpass that, but it is gonna eat into it and become a big player in online collateral. Just because of its property. So yeah, guys, if you're learning about this right now, you're still early. Even if this is the first video you've ever watched on Bitcoin, subscribe to our channel, subscribe to our individual channels, Jade Mansion and Crypto Noah. We're always trying to put out the best content that helps you keep your mind wrapped around this whole economic system, as well as strategies to deploy to help you make passive income or capital gains.
And yes, remember, Jamie Dimon doesn't care about the ETFs.
We're gonna make that's gonna be our next video. We're gonna he said some crazy stuff, so subscribe, be on the lookout for that one, and hopefully we'll see y'all there. Peace out.